and hot diggity dog, you guys. Welcome back to the Invested Dawg. Walmart, we had big dreams for you. We were all rooting for you. What in the world happened today? They are down like almost $10. 7%. What in the world is going on? Walmart dropped 6.95% after issuing a caution of the quarter two forecast and the concerns that they have within their within their consumers spending. I don't know what to say. They're bringing in a decent amount of money, but their earnings just are not there. And for the most part, they are meeting their earnings per share, but they miss a couple of quarters. And yes, in business, there's ups and there's downs, but is Amazon taking over Walmart? Is Target taking over Walmart? What's going on with the overall picture of Walmart? While the S&P gained the 0.2%, Walmart declined its highlights specific challenges in the retail sector, and I am not sure if Walmart is a good stock to have in the portfolio. Let me know what you guys think below, if these are appropriate numbers to be investing into the stock during times of uncertainty. Walmart is one of the largest retails in the world, and they do play a major part in the everyday economy. Almost everything is sold at Walmart. Millions of people do shop at Walmart every single day to get their essentials, to get their groceries and their household products, and to get their electronics and clothes and everything. Growing up, you go to Walmart. You go to Walmart, or you go to what was that one? Kmart. That's it. Or you go to Kmart. That shows my age right there. The company sells just about anything to normal, regular, everyday people. Walmart is often looked at the stable business, especially for investors, but some are saying it's a strong buy. Some are saying it's a buy. Some are even saying to sell based off of the last 4 months and their analysis breakdown. One of the reasons, in my opinion, why I think investors are watching Walmart closely is because the company gives insight into the health of the consumer economy. If people are not able to buy their groceries, they're not going to Walmart. If people are not able to get a new TV, they're not going to Walmart. If people are not able to get a laptop to work on their school assignments or whatever the case is, they're not going to Walmart and spending money. So if shoppers begin cutting back on spending or focusing more on just the essentials, the bare minimum essentials, Walmart often sees changes in the consumer behavior before many other companies do. So at the same time, Walmart has expanded far beyond the traditional retail stores. They still have that bread and butter mentality. So today, with it dropping so much, is that an indicator that we are in a massive slowdown? My answer is yes. We've been in an indicator that we're in a massive slowdown. Consumers are not out there spending money like they used to 3 years ago. The market is just not the same as it was 3 years ago. Walmart is seeing that. Walmart is continuing to invest heavily in their digital side, like their e-commerce side, their grocery delivery, that side. But again, people are not putting their money to go and drop my groceries off at the front of my doorstep if they don't have a lot of extra money to begin with. So for investors, I think our perspective should be that Walmart is considered a defensive stock. I think that we should have it in the portfolio. I definitely do think that you should have bought today's dip. It is alarming to see that it's going down. It's going down by the river, that it's going down, but I think that it is a defensive stock. I think that it's worth watching, it's worth investing in, and it's definitely worth having a conversation about whether or not this is a proper stock to have in the portfolio while we're going through a recession. Remember this, as inflation and supply chain challenges, as all of that is happening, as the consumer spending continues to reshape the economy, Walmart will remain one of the most important companies connecting the day-to-day financial health of the American household budget. So that is something that you should be keeping in mind when thinking about investing. I mean, there's always stocks, there's always other businesses that you could think about putting your money in. I mean, look at Target. Let's go over here and take a look at Target really fast. I don't want to make this video about them by any means. I'm not a big fan of Target, but Target was able to grow a little bit today. They're at $126.15, closing of today at 4:30 or at 4, I should say, of the market. And they've had their ups and downs. They've been down more than they've been up lately, but they've had their ups and downs over the years. And I don't know. I personally feel as if Walmart by far outweighs Target Corporation, ticket symbol TGT, with the defensible side. I mean, some people look at Target as, hey, I have some money, I'm not going to Walmart anymore, I'm going to be going to Target. They're kind of seeing the same thing as far as their revenue versus earnings. It's been consistent of a mirror between the two of them. Obviously, Walmart is much older, so they have much more data and much more history that they can pull from to make a decision than Target does. But Target, their revenue versus earning, there's still a humongous gap in between. In 2023, they were around $110 billion for their revenue, and they were only gaining the earnings of $3 billion, and it's been pretty consistent over these last couple years, over these last 3 years. They have been a little bit more consistent when it comes to their earnings per share. They've only missed one quarter since Q2 of 2026, so that's not the most horrible thing. There are a lot more analysis recommendations saying to hold. Maybe it's not a great idea to be selling, or it's not a great idea to be buying. But of course, you still have some haters that say buy, buy, buy. There's haters that say sell, sell, sell. People that are buying are dumb. Everybody has their own opinion. But I still think Walmart is a much better investment than Target is and ever could be. And with that, you guys, this is the Invested Dawg, as always, signing off.